all these experts that are excited to talk to you. Yeah, literally.
You're lucky.
And all of us say, well, it's very personal and specific. Well, we can get personal and specific.
And Rafik, do you want to start?
Sure. Thank you very much for coming. I am, as my brother said, a real estate agent with Keller Williams, and I've been an agent for 6 years. I specialize in helping longtime homeowners navigate one of the biggest transitions of their life. So with clarity and confidence, and that's always my goal, is to make sure that my clients understand what they need to know in order to move forward and make the best decisions for themselves. I commend you for being here today. It's a step in the right direction, and it means that you're taking control over planning your life and your future. And if you're watching this video at home, hopefully you'll learn the process for making the next best decision for you in your life and currently where you are. It's important for you to know my background a little bit. The reason I got into real estate was I originally was going to sell, I wanted to help people buy and sell businesses. I have my master's degree in business from the University of Colorado, and that was going to be my goal. And in order to facilitate that, I needed to get my real estate license in order to sell personal property. And once I transitioned into residential real estate, I realized I had gotten into the right business for myself, and I didn't feel the need to change after that. Last year, I was ranked in the top 1.5% of agents in the country, and my first year, I was Rookie of the Year. So it's been a great journey so far. I want to start with a personal story. I was helping my mom earlier this year. She is currently a real estate agent in South Carolina, but she wants to move out to Colorado to be closer to me and my family. And we found her a really great 55 plus condo in Denver, and she was very excited, had a swimming pool inside, and we got her under contract, and the seller was more than happy to work with us on a flexible timeline to get her property sold in South Carolina. And so they gave us a month, and then they gave us 2 months, and then they gave us 3 months, and my mom's house never sold. And as hard as that was, we had to terminate on the purchase here, and she had to transition and not sell her house in South Carolina and make new arrangements. And I don't tell you this as a success story. Obviously, it was not a success story, but it got the conversation going with my mom. And my sisters and I and her all had to come together and start planning. And planning is the ultimate key in having a successful transition from whatever it is. In my case, specifically with homeownership. And so because of this, we have a plan for the future. Even if it wasn't what our original plan was, we have one moving forward. And so nobody has tomorrow guaranteed. Nobody. It doesn't matter age, race, what religion, whatever. Tomorrow is not a certainty. So because of this, we now have our plan, and I've learned that the importance of planning. And so I encourage you to plan. And that is why we are all here today, to help you and people at home figure out what the next right best step is for you. And so I see my role with my clients as an advisor, as a coach, as a rock, as a support. It's a very emotional process, selling a home that you've lived in for many years. And so my goal always is to help my clients feel comfortable and in control of their next steps in life. Some questions that I have been getting from my clients recently are, how do I sell and buy at the same time? And so there's a lot of nerves around not knowing what the process actually looks like and what is possible. And so it is possible to sell your home, stay in it after closing for a few days, a few weeks, we can negotiate, and you can transition into your new home, and you can close on both at the same time. There's also other options. You can stay in your home and have a reverse mortgage, which is what Kate's going to help us with. And that will allow you to stay in your home long-term and not have to move. And so there's lots of different options, and it depends on your unique situation. And that's how I work with my clients. Should I declutter before listing? Yes. Please. Definitely. And that's what Dawn is here to talk about with us later. She's an estate sale professional. And so it's important to make peace with your home, and at the point that you decide to sell, it becomes a more of a, I hate to say business transaction, but it becomes a transaction. But you have the time before this process to really say goodbye, clear out, go through all of the things, and get the house ready for its next owner and next family, or whoever decides to live there next. What is my house worth? Well, this is a very complicated question. It could be worth a wide range of numbers depending on when you're selling, the current market conditions. There's a lot in play. And so the way that I work with my clients is, before we list the house, we have a range where we're going to be, and then it can change on a dime, the market. And so what I do is about 2 weeks before we list that's when we solidify a price. And it just depends greatly on what's going on in the market and what's currently available. And when it comes to pricing, I like to look at what our current competition is that's listed, rather than old sold comps, because those are already a month or more older, a month or more in the past when those went under contract, and we're only finding out what they sold for the day they close. So it's important to look at the competition, and we have to be the prettiest girl at the dance, and now we also have to be the cheapest girl. So yeah, not too cheap. So that's our current market, and so that's another question, like what is our market like right now? And it's not a very strong market for sellers at the moment, unfortunately. We peaked out a couple years ago, and we've been more or less on a downward trajectory since then. However, real estate is very cyclical. It goes up and down. I mean, if you've been around longer than 30 years, you know that. So it can change very quickly, and it tends to move in cycles. So it's not, if you don't need to move now, then you can always wait until the next positive market. The best time to sell in the mountains, so specifically since we're in Evergreen, the best time to sell in Evergreen for the year is between February and May. So if you're going to sell in a particular year, if you can time it for between February and May, generally speaking, that tends to be the best time of year. So we'll have Q&A at the end if you have any more questions. Happy to answer. But moving on, so the way I see my process with my clients is I have a structure that I like to follow, but every client is different. Every situation is different. And so my process depends greatly on my client's situation. And so I cater my services and everything I offer to what that particular client needs. It's not one size fits all. I also have different listing packages as well. So it's not one price for everybody either. And so thank you very much. To wrap up, I do want to mention my team. I have tons of support with my brother, Adam. And then I also have a transaction coordinator that helps me behind the scenes. She helps with paperwork and all that stuff. And she is Terry Cast. So next we have Dawn up to talk about estate sales. And yes, come on up.
Morning. Oh, thank you. I'm Dawn Quaiser, and I'm with 5280 Estate Solutions. We have an estate liquidation company based in Golden, Colorado, and we've been in business for about 16 years. We have a variety of services that we offer, and like I said, we've been in business for 16 years, and before COVID hit, we would be in the property, setting everything up, pricing it, and opening that up to the public to come in and shop for, say, a 3-day sale. And then when COVID hit, we had to switch our program, and now everything is online, which is great. There's a larger audience. We ship to the East Coast. I've shipped to Costa Rica. So it's kind of, we think it is working out quite well, actually. So we provide buyout services as well, as where we can come in and we buy one item, or we've bought whole estates in the past. So it really depends. We too like to work specifically with our client, whether it's, sometimes we've been there, they had their windows replaced, so we're there for that. It's kind of a wide range, but there's no cookie cutter situation. We like to work with you and your needs and how we can best come up with a solution that works for you. Let's see. So when we do buyouts, we can either buy one item or, like I said, the whole estate. It really depends. And we do have professionals that I call on. We have a large network of people who have specific expertise, that if there's art or rugs or first edition books, we have people that we can call who help us with that. And then everything is online. So we have bidders. We don't price anything ourselves. Everything is online. We have it out there for approximately a week to 2 weeks, depending on the inventory. And then all the bidders, it starts at zero. All the bidders, and there are quite a few of them actually, just start the bidding process. And then the last day of the auction, when the auction closes, that's usually when all the magic happens, the last 15 minutes actually. So, and the buyout services really works well for certain situations. If you live in a gated community, or HOAs or secure buildings don't allow estate sales there, that's a great service. We can come in, still help you get rid of your items, and abide by the rules that you have to adhere by. Let's see. Should I ask for questions? Should we do that later?
We'll do Q&A.
Okay, we'll do that. I think that kind of covers what we do. So, yeah, hopefully that helps.
Hey, Kate Higgins, and I'm with, as he said, BW Mortgage, and I'm going to talk about reverse mortgages today. When you're considering retirement, we're looking at three things. We're looking at longevity, lifestyle, and liquidity. When you're looking at longevity, we want to make sure, do you have enough money to meet your basic needs, lifestyle needs? Lifestyle, will you have enough money to have your, meet your standard of living? If you're used to having $100,000 a year and all of a sudden you have $20,000 a year, we need to kind of look at that. Liquidity, we have access to tax advantage money when you retire. So we're going to talk about reverse mortgages, how they work, the uses and their benefits. So reverse mortgage benefits are, number one, they're low risk. It's a government backed product. So it's government insured and it's non-recourse. The funds are non-tax. We always put the little asterisk to consult your tax specialist. And you can use those funds for however you choose. There's no prepayment penalties. And you have a line of credit that's guaranteed and grows over time. That line of credit kind of works like a credit card. So the credit card 1 year gives you $10,000, next year it goes up to $20,000. That's how that line of credit kind of works. So you have access to that. When the loan becomes due, you don't owe any more than what the house is valued at, even if you're way underwater. And if your heirs choose to buy it out, they can buy it out at 95% of the appraised value. The most common uses are, you're retired, you don't want to have a mortgage payment anymore. So it eliminates that mortgage payment. Again, it provides that line of credit. If you have enough equity in there, you have that line of credit for future financial needs. And you can also use those if you were to sell your house and purchase another house without spending all your cash. Other common uses are paying off debt. I had somebody that was living literally off credit cards, and so we were able to pay off all their debt and to use their reverse mortgage in a lot of great ways. Supplement their monthly income. Again, with this particular couple, they had $1 million house but they didn't have access to that equity, so they were able to tap into that equity, pay off all their credit card debt, have a line of credit that paid off their taxes and insurance as they came due, and they were able to take another $1,000 a month for life to supplement their income. It also works as a great retirement tool. So if somebody has a house that's already paid off and they have a lot of money in the bank, sometimes people will use a reverse mortgage to be able to tap into this bucket when the market's low, tap into this bucket when the market's high, and at the end, you end up having more money than you would if you didn't. So that's another great retirement planning tool. Some people use it to remodel or to do home repairs. Healthcare costs, as you know, are high with that and prescriptions, so it helps you with offset those. And also long-term and in-home care. As long as you're living in the house, that reverse mortgage is not coming due, so you can use that for long-term care. It can be used to create cash for an emergency, or you just want to take a big trip and travel. You can be able to do that. And again, we talked about you can also use it to purchase a home, so maybe you want to downsize and move closer to your family. So what is a reverse mortgage? It is a home equity conversion mortgage, or a HECM, as you've probably heard before. And it's a unique property that or product that just is for senior homeowners that are 62 and above, and they have access to equity in their house without having to sell their home or give up title or make monthly mortgage payments. And I should just emphasize, it's a conventional mortgage. You're paying down your mortgage every month, so your equity is going up. Reverse mortgage is just the opposite. You're not paying monthly, and so your equity is decreasing over time. So again, reverse versus a conventional. And how does it work? Eligibility is you have to be 62 years and older, and it has to be your primary residence. And you also have to meet financial assessment, willingness and capacity. So we need to make sure that you have enough money, your Social Security, whatever income you have, to cover your taxes and insurance. Borrower's responsibilities are, again, you have to pay those taxes and insurance. You have to pay your HOA if you have one, and you need to maintain your property. The benefit is determined by the youngest borrower on title, the appraised value of the home, the current expected interest rates, and the product that you choose. And receiving those benefits, again, you can do any combination. You can just do a lump sum. A lot of people just do the lump sum and have that and have the rest as a line of credit. Some people will take it so they have, again, like this one couple did, $1,000 a month that helped them, and so that they had monthly payments for that. And then they also had that line of credit, and they were able to extinguish their debt. So you can use it as a variety of different ways. And the best thing is it is protected because it's government-backed. It's an FHA product, so it is government-backed security, or has insurance that'll pay for that if for some reason you were to default, you didn't pay your taxes and insurance. It's non-recourse, so that means it only goes after the asset. It doesn't go after you personally. Homeowner retains title to the home as long as the terms are satisfied, taxes and insurance. And the homeowner or estate is entitled to the remaining equity. So if you sold your house and you still had equity in the house, you still get that equity. Some people think you don't get that equity, but that's still your house. You're still on title, and you get whatever's left in there. You do have to have counseling. It is mandatory. And I will say that most of the people that do the counseling, at first they're going, oh my gosh, but they actually enjoy it. And so it's a good counseling class. People do like it. They learn some things from it. And you can do it over the phone, so you don't have to go to a counseling place. So that's kind of nice. The line of equity cannot be canceled, frozen, or reduced, which means that if your house value plummets, like on a regular line of credit you might get at a bank, they could cancel that. Here, it cannot be canceled. And it grows regardless of the home value. Now let's talk about myths and facts, because there are a lot of myths surrounding reverse mortgages. Myth number one, the lender is on title and owns the home. That's not true. They're not on title. It is still your house. You are still on title, and you have the power to refinance or sell whenever you'd like to do that. The funds received from a reverse mortgages are taxed. It is a 100% non-taxable event. Do you like the little asterisk that it just says consult a tax specialist, because they always have to cover themselves, when you say that. But it is a non-taxable event. And again, I'll go back to this one couple that we recently helped. They had, this comes up as another question too. Does it affect your benefits? They were on Medicaid, so we had to really carefully balance how much they could take out, how much they could have in their account, and how much we could do monthly. Reverse mortgages are risky and funds are not guaranteed if something were to happen to the lender. Again, it is a FHA insured product. So if it's not, if something happens, the FHA steps in. And it's not, I mean, it's the FHA product has come a long way from the 1960s. It used to not be a very good product for people, especially people who were not on the title. If you have a non-borrowing spouse, they weren't protected. But since 1988, it's now the most safest regulated product out there. The borrower can end up owing more than the house is worth. That's a myth as well. It's a non-recourse loan. So let's just say you're way underwater and you can still stay there till you pass away. I mean, they can't kick you out. So that is a nice thing. And I can tell you that's true. My mother-in-law had a neighbor that was in the house forever. I mean, she was way underwater, and she just would, I need you to leave. I'm not going to leave. I'm not going to leave. So she was there for a long time. So they can't kick you out. When a reverse mortgage becomes due, either the lender takes or sells the home, or the heirs lose their inheritance. Again, false. The heirs can still receive an inheritance if you still have equity in the house and you sell that house. That equity is your heirs or yours should you still be alive and need that equity. Again, the heirs can also purchase it for 95% of the appraised value. And no assets other than the home are used to secure the loan. It's a non-recourse loan. If a borrower outlives their life expectancy, the lender can kick them out of the house. Again, false. Back in the day, in the old products, there was it's a little dicey, but now it's a good product. You can never get out of a reverse mortgage. False. There's no minimum term, no prepayment penalties are allowed on a reverse mortgage. So you can sell that house and take the equity and go buy a different house. So you're not locked in. A reverse mortgage can impact my Social Security and Medicare benefits. That's false. It does not have any effect on your Social Security or Medicare benefits. Again, Medicaid, you have to kind of watch and be careful with that, because if there's limits on that, on how much you can have in your account and how much you can have monthly. So that's the only thing that we do have to watch out for. Since 2009, it can be used to purchase a house. And that actually works out really well. I had a client that came to me, this has been years ago, and the husband came to me and he wanted to do a reverse mortgage. And they were going to have to do a reverse mortgage, you're extinguishing your current mortgage. So some people have to bring money to the table to do that. And these people had maybe about $150,000 in that's all they had for retirement period. And they were going to have to bring about $120,000 to the table to extinguish it. And I said, somebody can do that for you, I'm sure, but I'm not comfortable doing that. I have to sleep at night and I don't feel like I can do that with a good conscience. And so I said, we could do a forward mortgage and decrease your amount that you're paying a month, but I don't think this is a good time for you to do this. And so anyway, they did not do that. A year later, he had a heart attack and died. And his wife, who was still working, said, I'm going to have to work forever. And I said, now's a good time to think about this reverse mortgage. Why don't when you're selling your house, let's take those proceeds. And she got maybe, I can't remember, like $450,000 from the sale of her house. And she was able to take that money and buy a house and still have $150,000, $200,000 in the bank and have no mortgage. So at that time, it was a perfect product for her. So that's what we did. And she's happy. And so we were talking about, people being on title. She later got remarried. And so make sure her husband was protected, they refinanced that reverse mortgage so that he was on that reverse mortgage as well. And so that if something were to happen to her, he would still be able to stay at that house. So to learn more, if you're eligible for a reverse mortgage, you want to know how much money would be available to you, you can get a quote, find out what terms. Feel free to reach out to me, Kate Higgins with BW Mortgage. Thank you.
And we also have a PowerPoint.
Hello, my name is Amy Stevenson, and I'd like to say that I'm a proud survivor of an abusive relationship with corporate America. Don't know if anybody else has had that. I did retail management for 10 years, and they owned me. And so when I had the opportunity to get my financial licenses and stop helping mom buy costume jewelry and cheap shoes, I wanted to help people with their finances. And about the boomer generation owns about $19 trillion of wealth in their real estate portfolios specifically. And there's a big trend where the boomers own more wealth in their real estate and not necessarily in their savings, their investments, retirement accounts. And so that's why I love classes like this, because there's so many ways that we can utilize your real estate portfolio, either via reverse mortgage or selling. So that way you can have that be supplemental or addition to your real estate planning overall. And so downsizing creates a lot of new great opportunities, but also a lot of new decisions to make. And the fear is that making sure when you sell and you walk away with $300, $400, $500,000, how are we planning those funds so that way you can have for longevity? Because we have to remember that the average lifespan is into the mid to late 80s nowadays. And so if someone's looking to retire in their mid to 60s, that's 20 years that you're technically not going to be working, that we have to make sure that you're not going to outlive your money, right? We don't want to get into a situation where we have to work as a Walmart greeter. And so how can we utilize your real estate portfolio to help support that? Now, that does come with reassessing, and it all goes down to the basics of a budget. I know that's like a 4-letter word and nobody likes talking about it, but we have to do the budget on, does it make sense for you to keep the home you're in? Does it make sense to sell the home and buy something and pay cash? And so we still have to have insurance and taxes on there. But what does that new budget look like? And what do you need to live on in order to live within your cost of living? And I like to stack retirement as, what is your guaranteed income? That's pensions and Social Security, maybe creating some annuities. So that way you can still recreate that regular paycheck. You know that you're going to get paid $5,500 a month between those three avenues. And then from there, we can supplement with your tax required minimum distributions through IRAs. But then you have another level that's going to be for your fund money, your medical and funds in mutual funds or SMAs. And then what's your legacy money going to look like? And we can kind of layer all three. So that way you can live within your budget, within your monthly income that we've created for you. And then how can we build to the other areas? And the number one thing is we got to eliminate debt, right? Sticking time bomb. The average American consumer carries about $16,000 of consumer debt. That's not student loans, that's just straight credit cards. And so getting out of a position where you are in debt is going to be the best thing for longevity, because what most people do is they have to live on credit cards for a while, and then all of a sudden $500, $1,000, $1,500 a month is going out for credit cards and car loans, and you can't afford your lifestyle anymore. And then that's going to eat away at your retirement. So you are going to be in a position where you have to get a part-time job or move at home with your kids. We don't want to be a financial burden on our children in our later years. And so making sure that we coordinate what that big lump sum is going to look like with your Social Security and your pensions is going to be crucial. When do you plan on taking retirement? What are the projections on how long you can live off of your retirement assets are going to be key to determine when and if you can retire and what age. And does it make sense to take some of those retirement proceeds and put money into an annuity or in a separately managed account, a managed fund, so you can have that supplement your income while it's still building money and wealth within the markets? And then obviously talk to a tax advisor about how your withdrawals are taxed based on what kind of account we put it in. There are great, what we call non-qualified accounts, where you can take real estate portions and put that into accounts where you keep your taxable liability very low, if zero. We have a great fund, for example, that pays qualifying dividends. And so as long as you're taking less than 6 figures of income from these stocks that pay dividends, then you have zero tax liability on that income. And so how can we supplement that with Social Security and pensions and things like that, so that way you can have consistent income coming in without worrying about your tax liability? Because the goal with retirement is you need to be beating inflation and you have to beat tax. If you can beat those two things and you can live on a budget, then you can have a very healthy retirement overall. And also avoiding the big windfall, because I don't know about you, but if I get a lot of money in my account, that's when I'm like, oh, shoes look really nice. And this trip looks fun. Somebody over here. And so making sure we're avoiding the windfall, and we have a plan for it. Now you've worked hard. You've owned a property for 20 years. You're almost paid it off, and it's ready to kind of move on and downsize. Let's have some fun with it. But let's have planned fun. We can have some fun, but we're not be able to have all the fun. And that's where I had a client who received an inheritance, and we had all these plans to pay things off and all that. And then she got a quote from a gardener, and she completely redid her backyard. And it was beautiful, but that ate out half of her inheritance. And then we were going to pay off some credit card debt and invest at least 25% of it left. But she just wanted to go look at the Jeep dealership. And suddenly she got the beautiful dream car of her dreams, but she had to put almost every penny down that she had left and still ended up with a massive payment. And so being aware of how big your eyes are and how excited you get, knowing, yes, can I pay for it because it's in my account? Yes, but how is that going to affect tomorrow version of me, or 10 years down the road? Will I still have this money, and is this money working for me? Because you've worked hard to build your equity in your home. You work hard for your income. We want to make sure your money is working just as hard, and in fact, should be working harder for you than you worked for your money overall. And then what are some legacy goals that you have? I think that's really important to discuss with an estate attorney, and what's important for you. Do you want to leave a house? Do you want to leave legacy money? Do you want to make sure you have life insurance in place to cover your end of life expenses? What does that look like? And how can we structure it in a way so that we can avoid taxes as much? Tax evasion is illegal, right? But tax avoidance is something we all should participate in. And there's a lot of different ways that we can do that. And we can do it through legacy planning, through a transfer on death clause with your deed, through a TOD designation in your non-qualified accounts, beneficiaries with your retirement accounts. So your those that you leave behind can be gifted with the work that you've worked so hard to build these assets over your lifestyle. But overall, downsizing is a great opportunity to decide to own your home outright and to not have a mortgage, or to use that to draw a line of credit to supplement your income. There's a lot of amazing things we can do. And again, a lot of it just depends on what your individual goals and needs are, where you're at financially, and what makes the best sense for you. So thank you very much.
Thank you, Amy.
Thank you.
Next up, we have Molly.
Thank you.
Hi there. I'm Molly Clement. I'm founder of Older Adult Technology Services, and I'm here to talk to you guys about cybersecurity and fraud prevention. Now, this will obviously apply to not only seniors, because there's new technology every day. People are finding new methods of taking advantage of you and hacking into your finances. So here are just a couple of numbers for you real quick. This is just people over the age of 60 in 2023. The number is going up significantly, but they're finding that the older population is most vulnerable to these, just due to the being less fluent in those technologies that are coming out. When you have a new smartphone, I've been working with a lot of clients that get really frustrated trying to navigate, using apps or scanning QR codes or things like that. And they keep even just pop-up ads for some of these things. You want to just really keep an eye out on where you're navigating to and who you're talking to. But it's interesting where tech support, investment, and romance scams tend to be the biggest earners for fraudsters out there. So I did have a client who played Words with Friends, and it becomes more of like a social media. You're able to interact with other players, and started up a romance with this individual who ended up taking over $30,000 from her. So this is also for if you have older parents as well, like we gotta keep an eye out for them as well, like make sure that they're aware of everything that's going on out there. So banking, shopping, like if you're putting your credit card number in on any app or anything online, you have to make sure that you're checking the website, it's where you intended to go. These pop-up ads can be really tricky, and it even happened to my mom while I was helping her, and she was getting frustrated because she was trying to download the app, and then it took her somewhere else where it was saying she needed to enter her credit card number, and the app was for a security camera. So, and then there was a pop-up, and she entered in her debit card information, and like that, and she was like, fine, I'll just do it. She was getting frustrated, and she was like, fine, I'll just give them my number. No, I was like, stop doing that. And then she got a call from her bank, which wasn't her bank. So it's really the intelligence that's going on behind this, though, it's getting more and more, especially with the use of AI. They're able to impersonate your bank. So just forming a relationship with a banker, forming a relationship with your realtor, with your financial advisor, you want them to be able to confirm things about you that no one else would know. We also were talking about like wire fraud, where somehow someone's able to hack into your email and sees that you're in the midst of a huge transaction and can mimic title company signatures on emails. And you should always be confirming verbally, and that person who's on the other line can give you information about yourself that isn't just readily available. You need to be able to confirm those things verbally before they're transacted. Fake calls, text messages. There's one going around right now where it's saying that your easy toll pass is past due. And people are like, well, okay, I didn't know. And they're clicking on the link and providing their financial information. Even people calling saying they're the IRS. Usually when they come with more authority over the phone or something that's a little scary, IRS, that's scary. Like, okay, you wanting to take that seriously and give them as much information as they may need. Nobody from the IRS is calling you. Nobody from the IRS is calling you. You don't have to reply to text messages. You don't have to answer phone calls that you don't recognize the number from. Let them leave a voicemail. And if it seems legit or it's something that you need to address, have some questions ready to ask them to verify their identity as well. Yes, viruses, malware, keep your software on your computer and your phones up to date. And then as well as easy to guess passwords. Now they have tools that will filter most likely passwords that you would be using. So never use names or password as your password. Make it and change them regularly. And if you have, concerns about, did somebody get into this account, or you are having, the first thing you do, go in and change your password. So phishing scams they're going to come at you with like, you're in danger, or you need to act now, or your password's been compromised. I recently was able to spot a phishing scam through a potential employer, or who I thought was a potential employer, but there were certain things in the grammar that were off, like random capitalized letters in the sentence, or just things that just don't really seem right. If you have a gut feeling about it, stop what you're doing. Stop engaging with it. Exit the program that you're in, and don't continue. Don't give them any information, especially if somebody's just randomly like, okay, what institution do you bank with? No, Why would they need to know that kind of information? And if it's, your financial advisor and you've met them face to face, yeah, we can talk about my bank information because I know you, and that's important information for us to proceed with our business. But if it's just a random email saying that they are with, your
Yeah.
financial advisor, no, no. Just make sure you talk to,
Always call your friend.
yeah, call the human. Rely on the humans.
I'm always like, okay, great, call the secretary, I'm sure it's you, every time.
Yes, yes. So with emails, if you don't know the sender, don't open attachments. That's a way they can get into your computer, get passwords, etc. Again, with the creating stronger passwords, yeah, start getting creative with making it as long as possible and not using consecutive numbers or letters or things like that. Yeah, and your birthday, no, just don't. Let's see. Yeah, again, like on Facebook, it's kind of tough too because we have like next door or like your neighborhood information on Facebook. And you're like, oh, I'm having a garage sale. Come to this address. And just know that that is opening potential threats for people to target you, especially when, if they're going to call saying it's your bank and they can confirm your address. Ask for more, ask them to confirm something else. Yeah, and make your profiles private. Why do they, unless you're like a business or trying to, acquire more followers or something like that, just keep your accounts private. Instagram, Facebook, any of that. You don't want just anybody being able to be your friend in real life and on social media. Again, so yeah, protecting your devices, using locked screens. Like, I know it can be annoying with having to enter a password or setting up the facial identity on your phone. But if anything, ask for help if you need that help, either a family member, a friend, or call me. That's what we do. Let's see. Turning on two-factor authentication when that's available definitely helps. And also check in on your accounts regularly. Check your transactions. Sometimes, even you've subscribed to something that you forgot about or don't know about, or didn't really authorize. Those are things that you want to kind of keep an eye on. Also, like my son plays video games. The purchases. I was like, wait, whoa. Okay. And fortunately was able to get a refund from Microsoft. They were like, sorry. But I had to set up some protection there too. Because also kids don't know. And if you have a grandchild, messing with your phone or your computer, keep an eye, check your stuff, keep passwords, keep things locked. If you get scammed, you're going to want to change passwords immediately. You want to let your bank and credit card companies know, and your financial advisor, and your real estate agent if you're in the middle of, a big transaction or anything in that process, and also report it to the FTC. And you can also put a freeze on your credit through Experian. I recommend calling and speaking to a human at Experian. You could do that online, but again, if you're already in that red zone of being scammed, you never know where you could be directed to on your devices.
Well, so if you do lock it, make sure you ask them how to unlock it.
Yeah.
Yep.
I had that a lot where I'm gonna go pull credit.
Uh-huh.
I don't know how to unlock it.
Yes.
Oh, no.
Yes. Exactly. And yeah, and write down that information, the date of which you've locked your credit and everything like that, and also let your financial people know. Let's see. Again, don't click on suspicious links, share personal info. And here's just a couple of helpful resources. Another recent one we were just talking about is QR codes. People are using those. They're actually trying to find a way to phase those out in some circumstances because it's just somebody can just take a sticker and cover it up and put their own QR code and make it look similar to the one that it was intended for. So just be aware, and if you have questions, ask your financial advisor, banker, or resources, or contact me.
Next thing is Q&A. Do we have any questions for our speakers?
The question is on title fraud. Are there any recommendations for that? And actually, we have a person that works in the title office with us here.
One thing you can do, you can go to the county clerk's office, assessor's office. You can actually set up notifications from them if anything gets recorded on your property without your knowledge. You should get a notification of anything that is recorded under your name or that property. That would signify, someone tried to transfer your deed or do something. It is becoming more common. So again, just being hyper vigilant. If someone's calling and saying, I would like to buy your property, but they're not working with a real estate agent or they're calling on their own behalf, call a real estate agent, try to verify some information. Our title company, Heritage Title, we have some other things that we do just to verify buyers and sellers actually own property. So a lot of times what we see is properties that are owned by individuals but not occupied by the individual are highest, they have the highest frequency of being targeted because there's no one there to say, no, this is my property, you can't have it. So vacant land, those types of things. We actually put them through facial recognition, and they have to do different things if they have a different mailing address from the property address to help take extra precaution. It's not likely that it's going to happen, but it's not impossible. And just working with verified people, and again being hyper vigilant to do that. But where do you own property? Okay, yeah. So if you go to the county right over here, you could even go today and sign up for notifications. So, yeah, perfect. And in that case, you would check with them. And let's say something did get recorded, like a deed, you would just want to go to that. If there's most title companies they have like a little stamp that they put on their deeds, so you can see who it closed with. Call that title company and say, hey, what's going on? This is my house. And then it would go through a bunch of legal processes, unfortunately, but that's what that is there for. So.
This is a common thing that was happening more so a couple years ago. We were getting contacted by people saying an email or a text message, hey, I have some land, send me a listing agreement, I want you to list it right away. First of all, business never comes that easy. Never. So this happened to me exact scenario. And what I did and what I've told my office, and hopefully has had, when people experience this, it ripple effects in the office. We have meetings and we talk about this so that we can prepare for it. But in my specific situation, I was contacted by somebody, vacant land. I went on a free website called truepeoplesearch.com. I looked up the phone number that they called from, and I also looked up that property address, and the names did not match. So immediately I had a red flag. I reached out to the owner of that land specifically and said, hey, I was contacted by somebody that was trying to sell this land. Was that you? And he said, no. And so at that point, we knew it was fraud. I contacted the title company just to give them a heads up, and that seller a heads up. 2 years later, he actually listed with me. So it was good faith. But that is what I've recommended to the agents in our office, is to do your research, like just be proactive in figuring out like who's really contacting you. So hopefully that helps.
All right. Any more questions? I actually got some, and I'm gonna start with Dawn. And what happens to the items that you can't sell or won't sell? Or is that for the homeowners to decide? Or
Well, not necessarily.
Oh, yeah.
Not necessarily. It depends on the situation. Sometimes we'll donate to women's shelters, or um, Jefferson County has a place that we have donated to. Sometimes the owner would want their church to come in and take what they might need. It just really depends on what the client wants. We do have clean out services that we can provide. Most everything sells on the auction. Whatever we put on, it does sell. It might sell for a small amount, but it usually does sell. So we're not usually left with too much, to be honest. So,
all right, thank you.
mhm.
Molly, let's see, well, which one? How can I safely give financial help to family members?
Well, that is another one where you're going to want to use your trusted financial advisors or bankers, and also verify that it is your family member, because AI is getting they're able to replicate voices, and so making sure that again, due diligence. You don't want to just ask the questions about, well, where would I send it to? Ask questions specific to that family member, and talk about the conditions of what that financial help is for, and understand it thoroughly, just like if it were anybody else. Just because it's family doesn't make it, less of a risk. It can be intercepted at some point. So verify, and also transact through your financial institution. That's what I suggest.
So I don't have a long lost relative from Nigeria then.
No, you don't.
Okay,
You don't.
I'll stop sending money.
But I know a few would love to be your long lost.
Well, in addition to that, all financial institutions that I know of, you cannot just call and say you need to wire money, but we're going to change banking, or you need to send it to this address. There's a vesting period that must sit. So if you change your banking, they will not forward funds to that banking unless it's sat there for 30 days and there's due diligence to confirm that it is actually that person who changed the banking. And if they try to force the issue, most institutions will only do it with a gold medallion seal, which is a higher level of scrutiny than even a notary. And so, sticking with your institutions is important, because they already have those things in place to protect, so that Aunt Jemima can't call up and say, well, I need to take 10 grand out, but you're going to wire it to this account. Like, they're just going to tell you no, and to pound sand, which is good.
And there's paperwork
Yeah.
required. There's a lot of paperwork.
Yes. There's a
So
lot
make
of
sure
protection.
You're signing legitimate documents,
Mhm.
and they're being sent from your
Absolutely.
financial institution.
Absolutely.
All right, thank you. I'll continue with you, Amy. And how can I leave a legacy for my kids or grandkids? Like, what's the best way?
Oh, there's so many different ways. I'm a fan of how can we leave legacies in the easiest way possible for the family member to receive it. And there's a lot I can get tied up with, because people get messed up about death and money. That combination of things just gets people crazy. And so making it as easy as possible is the best scenario, and having the right kind of plan. And I like saying there's a book that's called The Love Letter, where you can literally have your will outlined, the trust with the trustees, who your investments are through, the title for your house, all those kinds of things, and set up things so that way when you do pass away, you don't have to wait for the red tape of the court system for the court to say who goes where and with what. Do you guys remember when Pat Bowlen died, and how long were they with the Broncos? How long were they? And and so getting you having the difficult conversations with your family ahead of time. This is what my goals are. This is who I want to leave the family to. this is my wishes, and setting it up so that's the case. So if you have an investment account that does not have a beneficiary designation, it's not retirement or life insurance, you can create a transfer on death investment account so it bypasses it. So if I legally pass away, the funds automatically go to this person, and that no court in the world can take that away from them. And so structuring your estate planning is key, and letting other people know what your plan is and how it's structured. So that way there's no guessing. I can't tell you how many clients I've run into where they found paperwork for life insurance when they dug through mom's house 2 years later, but it no longer was invalidated because it had to be filed within a year of death. And so having everything set up beforehand, and if there's an issue where you're only giving so much family member so much money or not any money, you need to be the one to have that conversation and set it up, not letting the person who's going to execute the will on the back end doing that for you. So a lot of planning is important.
Great. Kate, can I use the reverse mortgage funds to purchase a new smaller home? I think you went over that,
I did,
but
yeah.
you can,
But you
right?
absolutely can. You can take the proceeds from your house or however, and then buy something, and it actually optimizes you can get more for your money basically by doing that. So yes.
Thank you. And Vic, you want to finish this off with one more question for you?
Sure.
Yeah. What is the biggest mistake you see sellers are doing?
Oh boy. Currently in this current market, the biggest mistake I am seeing with sellers is taking the valuation for their home personally, because the value of your home on any given day is a reflection of the market. It's not a reflection of the brand new kitchen or the memories or all of the love that you've put into that home, or of what your neighbor's house sold 2 years ago. It's not a reflection of any of those things. It's simply the reflection of the market, which is the pool of buyers that we have to pick from at that given moment that the property is listed. So pricing the home correctly from the start is ultimately what's going to set you up for success in the end.
I've been reading a lot recently about how home values are, market values are normalizing, especially in places like Florida and Texas. Home values have dropped between 2 and 20%. Done some homework on Zillow. Actually provides a lot of information that you can trend forward and backward. For instance, in Boulder County, values have dropped 2 to 3%. What does that landscape look like in Colorado right now?
Overall, things have declined in Colorado, but generally speaking, it's not quite as bad as a lot of other places. We were unfortunately kind of high up on the list of market corrections nationwide, but we weren't the highest, which is great. And there's a lot going for Colorado as far as tourism industry, quality of life. It's a great place to live, and there's great jobs here. So when it comes to long-term success and values in the state, I don't have any worries whatsoever as a place to invest in Colorado. But there is a market correction going on. We peaked too high a couple years ago, saw crazy things happening, people paying way too much for homes, and we have been just correcting.
And when you say long term, what do you mean? Is that 3 years? Is it 5 years? Is it 10 or 15 years?
Long term for me is I'm looking at like from the 70s to now. Long term, real estate has always gone up. So even before the 70s, if you look at a trajectory, it's always gone up. There have been peaks and valleys, for sure. So when my advice to buyers now is, if you're planning on buying, this is a great time to actually be a buyer, because we have come down and we have corrected. However, nothing is for sure. Like I said in my presentation, nobody knows what tomorrow has in store. So my advice to buyers is if you're planning on purchasing, can you be there for 5-10 years? And then I'm 99.9% sure you will be safe in that investment. So I don't know if that answers your question.
Yes.
Okay. Oh, okay. So the question was, what areas do we serve? I love Jefferson County. I live in Pine. But I have gone all the way up to as far as Keensburg and Fort Lupton, and I've done showings in Pagosa Springs. So I have been all over, but I love being Jefferson County, Denver, that kind of area.
And I am all of Colorado and all of Texas, so pretty broad.
My licenses actually cover the entire United States. So I have clients in Connecticut and Idaho. Obviously, meet predominantly in Colorado, but I am licensed because of Zoom. I can help anybody in any state.
Denver, Metro, Jefferson, Adams County, all the way up to Boulder and Weld.
We go all over the state and have traveled to other states if need be.